Well, today we've seen Westpac announce a new profit of $6.3 billion for the year. That's about an 85% increase on their last return. That comes on hot on the heels of the other three major Australian banks announcing profits of a similar size, and altogether we're looking at a combined total profit of over $20 billion, or around about $1,000 for every single man, woman and child in Australia, and that's just their profit. So I think Australians are probably right to ask whether the current state of competition in the banking industry is working in their interest, and that's something that, as the chair of the Economics Reference Committee, through the inquiry into the banking industry and the state of competition in the banking industry, we'll be having a very close look at to see what can be done, what the current state is and how that's impacting on everyday Australians like you and me. Of course, the other aspect of this is that the Reserve Bank has increased the cash rate by 1/4%. That means that there will be an increase in everybody's mortgage, quite apart from what the banks do and the mortgage costs and how much it costs you to pay back your mortgage every month, particularly the interest on that. And the reason why the Reserve Bank does this is so that they can try and keep inflation between the target band of 2 and 3%. And by putting up interest rates, what it does is what it's designed to do is to deliberately take money out of your pockets so that you don't have as much to spend, so that it slows the overall economy down, as millions of Australians across the country also find they have less to spend. And that slows the economy down, takes pressure off interest rates and helps it keep it between 2 and 3%. But there is another way to actually take pressure off inflation rates, and that is for the government to stop spending rather than for individuals to stop spending. And if the government were to be a little bit more careful in what it's doing and maybe not keep on trying to stimulate the economy at a time that it's nearing full capacity and cut back their spending more than they are, that would inherently mean that there is less pressure on the Reserve Bank to increase interest rates. And that's a win-win for Australians, because not only do your interest rates not go up, which means you don't have to shell out as much out of your pocket, it means that you pay taxes, fewer or less taxes in the long run to pay back the debt that the government's racking up in order to continue stimulating an economy that's near full capacity. So, thank you.